Wall Street strategists are out with their expectations for the S&P 500 next year, seeing more gains ahead from most, but slowing from the rapid clip that we saw amid the AI boom. Joining us now, we want to bring in Drew Pettit. He's Citi's U.S. equity strategist. Drew, it's great to have you here at the desk. Let's talk about maybe the action that we have seen here over the last couple of days, because it was one of the things that you pointed out in your note that we're starting to see some of these signs of exhaustion. I guess my question to you is, do you believe this is going to be more of a temporary blip, or do you see this maybe a sign of some of that deeper fatigue?
So honestly, I think this is very healthy to start. We had a really rapid move to the upside. We had a lot of news flow. Election, Fed, bring back geopolitics. Earnings really haven't gone away in that entire backdrop. So I think investors and myself, we probably all need a good 8 hours of sleep here. But this is healthy. Honestly, we think sentiment was getting a little extended. Healthy pullback gives you some upside into the end of the year.
And so, healthy pullback right now, and in what names, what parts of the market would signal that it's a healthy pullback versus something that should cause more concern?
So I think a lot of the Trump-related post-election trades that are coming back in, look at energy today, industrials, some of the consumer names. I think that's healthy to come back in. We really still do like cyclicals here. And then on the structural growth side of things as well, there's still a lot of operating leverage. We got some pretty good results out of that side. I would especially say in communication services. Yeah. Again, this dip gives us a chance to buy back into those trades.
So what does that upside look like?
So right now, we think 6,100 into year end. That's been our bull case for the year. We were getting a little nervous when we got there very quickly post-election. You priced in a lot of good news, maybe on deregulation, maybe on some kind of tax cuts for corporates on the fringes. Yeah, then you have to start weighing tariffs on the other side as well, and just where we are. Again, back to sentiment. It was really, really extended and positive. Again, healthy correction.
We've seen a lot of optimism already start to enter into the fray for 2025 year-end targets. So 6,100 year-end for 2024, 2025. As you look out, what are some of the catalysts that drive you to the targets that Citi is looking at here?
So haven't put our official 2025 numbers
I was trying, Drew.
Yeah, everyone's needling at this point here. But what we're looking at on the earnings side, and this is where I think we've really differentiated ourselves, doing a lot more bottom-up work on the index. There's a lot of earnings resilience. There's a lot of operating efficiency. What's really interesting on the S&P 500 right now, employee count for the total index has gone up 1% year over year, but sales have grown 5%. So you start to get a little bit more operating leverage in these bigger companies that are top performers in their sectors. We think that continues. We think companies find more efficiencies. And I think that sales per employee is a really interesting number to follow.
With that, has earnings growth mirrored or kept pace how it should when you do have that imbalance, I would say, of the smaller growth in employees versus the revenue?
Yeah, it has. Actually, and earnings growth has been better than sales growth. Earnings beats, they're normally better than sales beats anyways. But you are seeing that show up in the bottom line. And I'm looking at sales per share and earnings per share. So this isn't buyback driven. This is like actually fundamentally operationally
Sound
driven.
business, yeah.
Drew, let's talk about Nvidia later on this week, because lots of questions just about how important it is to the market, how much people care this time around, especially given some of the dynamics at play. We certainly have seen a broadening in terms of market participation. How big of a driver do you see that being, maybe more so in that near-term sentiment?
Very, very important still. It's funny, because the beats and raises have been so aggressive for Nvidia, we are expecting, especially like our analyst covering the stock, does see a beat and raise, but a little bit of a smaller one. The difference is for this company versus, well, I guess, and the rest of the Mag 7 combined, you have seen the estimates for 2025 actually stair step higher. Whereas the rest of the 493, you're still seeing some softness here and there. I would say like the manufacturing space still kind of in the doldrums here. But yes, when you have that outsized good revision trend, it matters a lot, especially because it's basically lifting the entire index.
What do you think is then, from what we've heard from companies thus far in the earnings season, and we were just talking to the CFO of Walmart as well, trying to get a sense of, even beyond and through the holiday season, what are going to be some of the biggest drivers as they're going into next year? And of course, as it comes up in every conversation, tariffs are on the mind, and to what extent there is a tit for tat. But beyond that, what is the policy that you think businesses can rally around to continue to see healthy growth for themselves next year?
So it's funny. I'm going to step away from policy on this one, not to like completely dodge the question, but there's a lot of secular trends at work. We always talk about politics, this time of year every 2 and 4 years, right? But these businesses, they're going to run no matter what. Yep. What's really interesting here, there are still secular drivers. We want to talk about AI, but there's a lot of low-hanging fruit still in supply chain management and flexibility. So that's really played into our earnings resiliency thesis for years, and that's not going away. So I think flexibility, I think some optimism around just kind of getting past election uncertainty and eventually getting past policy uncertainty. We're not there yet. But I think we're going to go back to the structural. What can we change? What can we improve? How flexible can we be? I think that's really important for 2025.
Interesting. Citi U.S. equity strategist Drew Pettit, thanks so much for joining us here in studio.
Yeah, thanks for having me.
Appreciate it.